Okay, welcome to our 20th webinar, Holmquist Gardiner, a law firm focusing in real estate and business law, litigation and transactions. We're doing part 2 today of a 2-part series on key issues in insurance. Part 1 with our same awesome guest, who I'll introduce again shortly. We covered commercial liability policies, particularly surrounding real estate and development projects, so RAP policies, builders risk policies, and the like. And today we're covering cyber insurance, cyber risk, kind of current claims and trends, and how to work those policies into your system and understanding what's going on out there in the area of cyber liability. I'll remind everybody that's watching this that we have a webinar that's monthly and it's on our YouTube channel. And there are 19 other webinars out there that are helpful and informational. Urge you to take a look and watch those. And as always, this is for informational purposes only. This is not to be taken as legal advice. Our guest today is awesome at this, has worked in the insurance industry for 17 years. Melody Olson, now with Propel, formerly with Parker Smith and Feek. She's now a regional director at Propel. Focus and strength in real estate and construction with an emphasis on project risk, but of course handles issues like cyber policies and other policies that come in, CGL policies. And we're just super lucky to have native Washingtonian, University of Washington graduate. Everyone that knows me knows that I bleed purple. So super excited to have Melody walk us through this. And thanks for joining us today, Melody.
Thanks for having me, Imants, and thanks for welcoming back to series 2 or round 2 of our series. Excited to talk about a really key issue that we're seeing today in the insurance world, but just even in the business world, and that's cyber attacks and how you transfer that risk. And you can transfer it to insurance policies. So I would have to say that cyber attacks are the #1 claim in frequency that we see on the insurance side. And I'd have to say probably for the past 2 years. If we can move to the next slide. So cyber threats, I mean, everybody knows that it's really prevalent right now, and it's affecting all industries and all companies of any size. And really, we'll talk about a little later about kind of the size of businesses that are seeing the most attacks. And it's not just the large ones like the major target breach and things of that nature. So everybody knows, everybody's either seen it. I'm sure if I ask for a show of hands of an attempt to breach the business's system, a lot of people would raise their hand, and for good cause. I mean, cyber attacks are on the rise, and they threaten everybody's operations in a lot of different ways. We'll kind of get into that as we talk about what the cyber policy can cover, because a lot of businesses are electing to transfer that cyber risk and insure it, as opposed to self-insuring it in prior years. So in 2021, businesses experienced 50% more attempts on their system each week than the year prior. So 2021 it has seen a rise in attempts. And I think it's probably because of the prevalence of COVID, people working from home, people are fragmented. So, cyber criminals are seeing that as an opportunity to really, use that confusion to breach systems and attack systems when everybody's just kind of fragmented. We have a graph here, and as you can see, the attempts of attacks by organization just weekly by different industry sectors are quite consistent, and everybody is a target. It's not just the healthcare system or large companies such as like the major target breach that we'll probably talk about a little later as well. Next slide. So I don't want to get enamored in all the details of the costs, but I thought this was a good slide to put up as far as what is the average kind of cost of a breach, and costs can be quantified in a lot of different buckets. So on average in 2021, we've seen a 10% rise in just what the cost of a breach from 2020 imposed on a business. And we can only see that probably that's going to inflate over time. And really, you know, when we look at the cost per record of like personally identifiable information, you know, information of a person that's contained in somebody's system that includes their birth date, social security number. You could quantify the cost per record, and it's about $180. So, you know, particularly for those in the healthcare industry or payment card industries, you know, having access to that personally identifiable information that can add up quick, especially if you have a volume of individuals you're holding that info. It also pertains to small and middle market businesses. You have personally identifiable information via your payroll records of all of your employees. So the amount of employees you have can impact, you know, what that cost per record would be to a business if it were breached. I think another piece is lost business share of total cost of a breach. So, you know, just the financial loss or loss of business because of that downtime of the attack, recreation of data, you know, 38%. It impacts on a daily basis with those claims. Next slide. So I like this little pie chart. It kind of breaks down where the pain points are with a breach and how severe they are on average, you know, and this is across all industry segments and all sizes of business. The average cost of a breach is $4.24 million. Now for a smaller company, a small business with 50 employees, that'll be different. But if you're taking a blend, it's 4.24. But I really like looking at the percentages here because it's indicative of, you know, not just size of company and size of the breach cost, but it actually breaks down where the pain is felt from a breach. So detection and escalation. So this blue part, or the dark blue part, I mean, about 30% of the cost of a breach is encapsulated in just hiring a third-party firm to parachute in like a Navy SEAL. You know, I like to think of like, you know, with the cyber policies, if you have a breach, you have to call somebody, right? And usually it's these IT reconnaissance departments that are very experienced with breaches, and they come in and they figure out where the hole is, try to patch it, and you know, in some ransomware attacks, try to negotiate or figure out, you know, what the condition of the system is and if it can be repairable. I think the purple part is something that a lot of business owners don't think about, is the loss of business because of that downtime. So with like ransomware attacks, denial of service attacks, where they hold your system hostage, downtime for employees to recreate data that potentially is lost or locked, and things of that nature, and just, you know, not being able to operate the business. The average downtime was about 27 days, I think is the last report I saw for a denial of service attack, where, you know, business almost lost a month of income because of that downtime. And so it's no surprise that almost 40% of the cost of the data breach is associated with actual loss of income, as opposed to anything directly associated with the breach and recreation of data.
Yeah, I would just add that, you know, not covered in this, if you're a small business owner, is the just complete cognitive load factor of just days of that blue section. Somebody else is trying to figure out what happened, like where did the money go, what is going on. And while that's happening, just like any claim, you're sitting there going, oh my God, this just happened. And that takes away, you can't really calculate what you might have done or the opportunity cost had you not had to deal with that. And if we're painting a picture of the parade of horribles of what happens if you're not insured, you know, that cognitive load factor of not having a team that can come in and figure it out is, you know, as opposed to just calling your carrier, having them send the team in, you or your team are trying to figure it out. Good luck.
Yeah. It's not a great situation to be in. Down at the bottom, the lower, the lower end, the 27%, that's, the costs of post-breach response. So, not just fixing the system in the dark blue, but actually kind of repairing the system, notifying those affected parties if there was personally identifiable information breached, as well as just kind of recreation of data. Next slide, please. So of course, the insurance industry likes to come up with a solution to any type of risk or exposure. And so, about 5 years ago, we saw the rise of cyber insurance, the opportunity to transfer that risk from self-insuring to a third-party insurance company. And there are a multitude of carriers out there that provided cyber insurance, as well as today, but what we've seen some contraction in the market that we'll talk about later. But really, when we get down to it, a cyber policy covers a lot of things that are associated with a breach, and it's great. It's kind of a one-stop shop that encapsulates most of, or if not all of, the loss associated with a breach. So it has two components. And really, I like to look at it as kind of first and third party components. First party, meaning costs that your business directly incurs, are out of pocket expenses. And then there's a third party component where it's just your business's liability to third parties, to other parties, like affected individuals, because the data you contained on them, their personally identifiable information, has been breached and released to an unauthorized user. So, things that fall into the bucket of first party coverage would be the event response, right? Legal expenses, restoring data, those costs to notify those affected parties, all of the IT forensics to figure out where the hole is and how to patch it. Any public relations costs if it's a large breach. And then, depending on which venue the business is in and the individuals that you're holding information on, there's also credit monitoring costs as well. And each state has their own kind of guidelines of if personally identifiable information is breached for somebody in Washington versus somebody in New York. There's different guidelines per state of how you notify those affected individuals and how often. So is it direct mail? Is it mail combined with emails and phone calls? Is it, you have to notify them within 10 days or 30 days and then a follow-up after 45 days? There's a lot of guidelines by state. So especially with businesses that have employees in multiple states, or you have customers that you store, some personally identifiable information for that are in all different states, those costs of notification and then the corresponding credit monitoring can be absorbent. So also a component of the first party coverage is just the extortion or ransom, the ransom expense, right? That's, you'd like to think that you can that the insurance carrier can hire a third-party IT firm that is well-versed in breaches and they can patch the problem. But sometimes and I don't recommend it, but sometimes the carrier just gives in to the ransom or negotiates with the hackers because they can't get them out or they can't unencrypt the data. And so we've seen claims where ransoms have been paid and the hacker actually releases the data, and hopefully the IT firms learn from that and see how they did it and prevent it for future purposes. There's also buckets of kind of sublimits for funds transfer fraud and phishing, and we'll talk about that later in the common claims. And then I think, one of the biggest things is the business interruption coverage. So the loss of income due to the downtime, and that's all encapsulated under the first party portion of the policy. And as we alluded to before, the third party, if there's lawsuits, fines, and penalties because there's unauthorized access to all that personal information. And then, just any type of regulatory defense or PCI compliance fines, if there's payment card industry, kind of credit card point of access involved. Next slide, please. Well, so 2021 ransomware attacks cost businesses 170% more than in 2022. And that kind of directly correlates with our previous fact about, attempts weekly are 50% more than the prior year attempts on the systems. So business email compromise claims were up to 51%, and then funds transfer fraud claims were up 28%. So, another piece of information, the average ransomware demand is $1.2 million in 2021. And I'd say that's pretty consistent across the board, even for small businesses. They want $1 million. So, but I would have to say the common claims that we see is not as much of the third-party liability of breach of other people's data. Obviously those can be exorbitant costs, but the common claims are the phishing emails and the social engineering, and obviously ransom, extortion, getting into the system and holding it hostage, and then computer fraud or computer crime. So, but number one, I always put those phishing emails because goodness, I'd love if we had an audience, because I would ask a show of hands of who's seen those little phishing emails trying to get you to click on a link or acting like somebody else saying, hey, I'm the CEO of the company and I'm emailing the CFO and asking, hey, I need you to wire funds immediately. I'm getting on a plane right now. And it's so crazy. These hackers can even get into like the CEO's calendar and seeing that he is getting on a plane or traveling, right? And so the CFO might know, oh my gosh, yeah, he is. He said he was going to Baltimore the other day, right? And so they'll even like characterize it and watch the phonetics and just the way they speak in other emails. So it sounds like the CEO to the CFO, and it's always an urgent ask, right? It's always, hey, gotta go. And Imants, you've seen these personally too.
I have, yeah. And we were talking about a few, and one that I didn't tell you about when we were talking about this earlier actually happened within our firm, and just kind of tells the audience how aggressive these folks are, that they'll come after a law firm. And just to walk you through what could be something that happens is we had a new employee, so we hadn't yet turned on dual authentication. So if you're, just a news flash, if you're on Office 365 at your small business, make sure that every user has dual authentication. It means if they log in, they got to have two forms of login. Well, it wasn't turned on for this particular new employee. So we don't believe they actually clicked anything. Someone was tracking their emails and got in. So they were able to see all the emails incoming. And this hacker then sent emails that looked like they were coming from me. The email had the same email address. If you dug deep, you could see it wasn't the same, but they put my firm footer, and they used all of the same, to your point, Melody, they used all of the same things I say. I finish every email pretty much with like best and then IFH, right? Even inner office, like it's just a thing. And it said, please send I think it was like $50,000 to so-and-so for their investment, and which we would never do, and luckily we have an inner office protocol that if there's checks coming from our IOLTA account, they need to be viewed in person by a partner before and signed in person. It's not like everything else that gets wired out. So of course, our new person following our protocol was like, well, this is kind of weird. So she responded to the email and said, how do I print that out? The hacker said, go ahead and use QuickBooks and use my digital signature. So I instructed her all the way down, all the way saying best IFH. So it looked totally authentic, but luckily our employee followed our protocol and kept, I was on calls, that whole thing. Another thing, we think they could see my calendar through her calendar. So they knew I was occupied. But our employee stuck to the policies. And at the end of the day, before mailing this bogus check out, she checked, and I said, that's not a client of ours, and no, let's not send that. And but for that, we were all prepared to send it. So it can happen. The other one that we see all the time is to Melody's point about urgency. There's always some urgent matter that people want to hire us for, and they want to pay us quickly, and then they want a refund. And I suspect this happens in all manner of businesses, but in the legal world, we have strict accounting principles, so they know we have to put their money in a certain place, and they know it's regulated by the bar association, so they know we care. And anytime you have someone telling you to urgently send money, your gut should be like, let's just wait and check. Anyway, those are the two sort of main hypotheticals we see, and we continue to see these. So.
Absolutely. And I'd say a really, really common claim that we see is an employee changing payment information for a vendor, right? And it's an email from a vendor saying, hey, we've changed banks. Here's our new routing info.
Wiring instructions are a huge thing. All of our transactions now, all of the escrow companies have really express instructions. They don't want to see wiring instructions within the body of an email because all of these phishing exercises. So they want to see them either attached as a PDF, or they've got real extensive encrypted email systems for where you're supposed to send those. We urge everybody to follow that. There's a couple times this last year where people deviated, and one of those, the client did something weird, and then there was it was like $100 and something thousand payment that went into some random wired to the wrong account because someone intercepted the email, changed the wiring instructions, and then the funds were sent to the wrong account. So that stuff happens.
Absolutely. And it's super easy for them to do, right? And we're so busy. Every employee has so much on their plate. But really, I encourage anytime a vendor's changing banking information or payment instructions to pick up the phone and call them, and don't call using the number that they have on their email. It's all basic stuff, but we get busy throughout the day, right? And it's just easier to get it done and off the plate. But gosh, there's been $50, $100, $250,000 transactions where poof, the money's gone immediately.
That's really the most alarming thing about this, is that most of the time there's no following up on this. Like if we had accepted these retainer checks and then sent a check out and that cleared, it's just gone. You're not going to follow that money trail. It's not like people robbing the bank with the numbered bills that can be tracked, right? Like this is all just kind of digital, and it's all, so really it's key to have multiple checks on your money and your accounts, double checking wire instructions and going over the phone with them to make sure what you sent is what they actually received. Not a bad policy as well.
Yeah. And there's also, we've seen urgency emailing an employee. Usually they're a newer employee, and I don't know how they know that, right? And so somebody's striving to impress, and they'll even ask somebody to go buy a bunch of gift cards and mail them somewhere because it's untraceable, right? And as soon as they're mailed, they're gone and they can be utilized. And I was with a client about a year ago, and the president was like, yeah, this new guy, I called him because we're on something unrelated. And he's like, yeah, I'm at Best Buy getting all the gift cards you asked me to buy. I put $5,000 of it on the company credit card. And what are you using these for? And he's like, I did not ask you to do that. So I guess the moral of the story is, as soon as we can become privy to their tactics, they change it. Right. And then there's different ways that they can kind of spoof the end user into, willingly give money away under false pretense.
There's definitely getting the creativity levels increase, level of sophistication is increased, and just the volume. It's now, I think everybody's in the same world. It's probably 5 or 6 emails a day of really formal looking, and they're from other law firms. They look and they have a real firm name, and I just know they didn't send me a file. I'm not opening that.
And those are terrible, because right, an employee there's a link, or there's even attachments. We've seen malware in a PDF attachment for a resume sent to an HR individual, right? You're not anticipating this resume, but of course you're going to look at it, right? And then all of a sudden now it releases, it's in your system. and even spamming all of the contacts in your Outlook contacts, right? And
They
I mean,
spread.
yeah.
And that's what's happening on the file ones. We suspect that they are, because they're real names, right? It's real people that we are doing deals with. And we're like, oh, they got spoofed. Somebody in their firm, got hacked. And so now it's sending out to all the contacts they've recently emailed, and it's saying, hey, here's the docs for this transaction. It's like, no.
Yeah.
And that's the other one I would say that we're seeing a lot more of is the hackers are impersonating title companies, and they'll have, I don't want to slander any particular company, but for example, it would have like Chicago Title Company, First American Title. It has their logo and everything, and it has a real office address. And it's like, here are the closing documents. And it's got a real property address of property in Washington State, not your deal. You don't, you just got to be vigilant,
Yeah. Be skeptical. And it's unfortunate we have to be super skeptical, but we do. We could spend all day talking about claims, couldn't we, Imants?
Yeah.
Yeah. Next slide, please. So I guess, it's interesting because historically, right, when there weren't as many claims and cyber attacks, but the target breach occurred, which, ironically, the target breach actually occurred through a small mechanical contractor doing work on one of the Target stores, and they found a hole into Target's payment card system, which created a whole slew of issues. But really, historically, cyber insurance was, hey, large businesses bought it because of what happened to Target and Primera and things in the early parts of, claims starting to really start to hit the news. And carriers wanted market share, right? Because a lot of people were buying it, or businesses were buying it. And it became like $1 billion sub-segment of the insurance industry. And so it resulted in like super broad coverage, and it was super inexpensive. Like $100 million firm could get cyber insurance for $2,500 with, a couple $1 million limits, right? And it just was so expansive. It covered pretty much any and all claims and didn't sublimit anything. And all the carriers were that, like, literally their underwriting criteria was the company name, their revenue, and their website. So it was very in the box and inexpensive. And so a lot of businesses bought it. And premium and policy counts were huge. Next slide, please. Well, now the claims started rolling in. In the past couple of years, the claims are exorbitant, and carriers were responding to claims in a lot of different ways. I guess the first response was increasing rates, right? And the second response was sublimiting certain coverages, like the social engineering or the phishing, where, we're no longer going to give you $1 million or $2 million limit for you wiring funds to Kuwait, right? Unexpectedly, under false pretense. So we saw like the market reacted quickly because carriers were saying, gosh, we're paying $10 out in claims for every dollar we're taking in, and this just is not sustainable. So in this graph, you can kind of see cyber is the worst for any buyer because the rates are on the rise, the capacity is diminishing, so the amount of limit, the limits being offered are diminishing, the deductibles are increasing, and the coverage is like severely restricted in a lot of realms. So everyone will see, if they haven't already in their last renewal, a huge shift in the premiums being paid. And it's really just carriers' attempts to try to right size the amount of premium they should have been taking in to facilitate what they're paying out. So along with that, I would say there's just more stringent barriers of entry for underwriting, right? I mean, if you do not employ kind of multi-factor authorization, something Imants was referring to, like even if you have Office 365, you can turn on a feature for two-factor authentication. Most carriers won't even consider providing cyber coverage for businesses, which, 18 months ago.
If you don't have that capacity.
Yeah.
To do that. Yeah.
Absolutely. So that really, it diminishes the amount of carriers that would even consider, if any. And then we also look at, what does that cost, because you don't have those risk mitigation tactics employed. And so it is not unheard of to, if you're paying $2,000 for a business cyber policy 3 years ago, that you're paying $8,000 to $10,000 now these days. I mean, the rate creep and the renewals that we're just seeing in this first part of 2022 are significant. And, it's significant because they were so inexpensive at the get-go. And so the insurance carriers are playing catch up.
Yeah, I think just to give people an idea on our malpractice coverage, it was, CGL malpractice coverage. There was just like an add-on. Oh yeah, and you got like $100,000 of cyber. Like it wasn't like an additional charge 5-6 years ago. Now it's like, oh yeah, and there's this little bonus bump.
And you're paying for it now.
Yeah. It'll be
Next
great.
slide. Yeah. So I give a little bit of flavor of market expectations. We kind of bifurcated it by small and middle market business. Large segments get severely underwritten, and they are going to see rate creep as well. But those small and middle market businesses, they will see at least 25 to 50% increase. But quite honestly, it's a lot more for most businesses just because of the nature of the market. And, carriers like to come out and say, oh, it's, on average, our book is taking 25% or 50% for certain segments, but we're seeing 100%, 200% because they were just so inexpensively priced prior. And, so I would take these with a grain of salt, but what we like to do is in pre-renewal discussions with our clients 3 or 4 months out from their renewal, prep them for a significant adjustment on the cyber expense. Fortunately, it was the smallest line item that they ever, kind of paid for their whole insurance program. So even 100% increase, we're talking about, a few $1,000s, maybe $5,000, as opposed to, hundreds. So next slide, please. So just a couple more graphs, but basically it's just saying 2021 was a year of high claims and higher premiums being charged, and just markets reacting and adjusting according to kind of the craziness of the cyber attacks. Next slide. So, okay, you're saying that, gosh, there's all these cyber threats. Yes, we see them. You can transfer the risk to an insurance policy if you want, but what should we be doing? Like, what are the top things on the top of my mind that we should be doing to mitigate the risks for any business? And I was talking about this with Imants earlier. It's employee awareness. I mean, it's interesting. And I get the emails every month from our IT team of, hey, you need to watch this video about some education piece on cyber attacks or malware or different ways that, cyber criminals are going to spoof you as an employee. And of course, I have to watch the video, but I ended up learning something, right? And it's made me very skeptical, and even more skeptical where a client will send me something, but it just seems off, and I'll call them and be like, yeah, I sent that to you. I'm like, just checking, because if your employee base, that is a major source of breaches. It's just clicking on the wrong link or doing something thinking that they're responding to months of writing the check, right? Through QuickBooks, which you probably don't use for checks usually. So I cannot kind of stress more of making employees aware and having some type of training or training schedule for employees, just, to stay on top of what are the latest and greatest ways that cyber criminals are tricking our employees. Migration to zero net trust protocols, really an IT term. I'm sure your IT vendor would know, but really it's kind of related to the multi-factor authentication. So when I sign into my system, just like Imants, right, I get a trigger on my cell phone saying, hey, did you sign in? And I tell it yes. So there's a lot of multi-factor authentication vendors out there. I think we use Okta, but Imants, like we said, it's an add-on to Microsoft 360 as well. Network security configuration, and I'm sure your IT departments are doing that, but really just access control management. Employees shouldn't have access to all critical systems unless it's absolutely necessary. So cutting off access to certain pieces of the data universe within your servers is critical.
Yeah, I would just say, if you have the first, having these protocols and having the training that, hey, this is the way we do things at our shop, right? And then not deviating from them. Because a lot of the stories I've heard, it's like a senior person sending an email saying, well, we're going to do this now. And if there's anything that feels wrong, the go-to sort of fallback should be check in person, or via telephone with the decision maker to be sure that's something that we're actually going to do, since it's such a deviation from our normal policies. So, hey, we don't usually spend $5,000 at Best Buy on gift cards. That's not a request we're going to field and act on via email, and then with all check and funds related matters, that's like internal business stuff. I'm sure, in most of the businesses we represent that have funds coming and going on third-party transactions, that comes with a whole series of different things. But just as a small business person, your back office really has to have, and a lot of folks, we've just kind of gotten, it's been so easy to do all of our banking online. And it's been so easy to send digital checks. And we're just now coming out of the haze of like people figuring out, yeah, it's pretty easy. That means it's pretty easy for me to get in there and take it. So, just not getting lazy about that.
Absolutely. Next slide, please. So there's a lot of responses to cyber attacks. And, when we talk about cyber insurance to clients who don't carry a policy, or, we just want to make them aware of the exposures that we're seeing on a daily basis, there are some common myths, right? Some people say, gosh, our business is not a target, they're going to get the person down the street or some larger business. And the frequency of cyber attacks on firms with 250 or less employees increased 57% just year over year last year. And I think, smaller businesses are a target, smaller and middle market, right? The sophistication of the IT systems are just different than a large company like Target, and even Target can get breached, right? So I think, knowing that, gosh, the target really is the small and middle market segment. We commonly hear, well, our IT team's on top of it, right? And again, there's just nothing is foolproof. And I think, just as cyber criminals are ever evolving, system patches and just making sure that, even the software is even up to date. I mean, that's why we see a bunch of software updates from Microsoft and things, because they're patching, holes in the background that they weren't aware of before. So sometimes it's not even your IT people that cause the issue. Number three, I'd say, only credit card people that, take credit cards like restaurants and help and take health data are targets. And more and more we see, I think 97% of cyber attacks are all financially motivated, right? And personally identifiable information, yeah, it's critical. They could get a bunch of people's social security numbers and birth dates and go open up credit cards in their names, but it's a lot easier to just, get 50 grand in 2 hours from an employee. And so they're finding, gosh, this is a lot more lucrative and less time spent on trying to steal information on people, as opposed to just stealing their money under false pretense. And then I think the most common thing I hear is, oh, we're on the cloud, we're okay. Imants, are you on the cloud?
Yeah.
Yeah.
It doesn't really matter.
Yeah, it doesn't matter. It doesn't matter. All they need is an access point. All they need is an employee to click on a link or open a PDF file. So Yeah, we're seeing it more and more. And, I appreciate kind of you guys inviting me to talk about it, because whether insurance is the solution or not, it's it's the awareness and being aware of kind of what are the tactics and how do we kind of fight against it? Because I think cyber crime is here to stay. And just as we lean more as a society on electronics and doing our banking online and everything, I mean, it's just, it will continue to be the number one claim in the foreseeable future.
Yeah. Yeah, it strikes me as this is going to be an increase. And then it also strikes me that, you're looking at situations where you're going to think about going to get a policy after you've just had a big hit, and you're going to apply for it, and you're going to have a questionnaire ask, have you had any cyber breaches? And under penalty of perjury, you're going to say yes. And now you're going to pay 2 or 3x because you had a claim. You didn't have it wasn't covered. You didn't have a carrier, but you had an activity that they're probably going to find out about it. So I think we're ready for some Q&A time, Melody, if I'm not mistaken, or do we want to go through this importance of employee training?
I think I stressed before on the importance of employee training. So just another slide to say, gosh, make your employees aware, because they are a critical source of breaches.
That has been 100% of the things I've heard about in our personal stories at the firm, where we get, it seems like a couple times a year, we have legitimate ones that go almost to the point of funding because they're just so legitimate. If our audience members have any questions, go ahead and type them in the chat. I have one right now, obviously directed at Melody, because she knows a lot more about this than I do. And that is, do I have to wait until my renewal for my other policies, or can I come in sort of mid-cycle and ask for an addition to my policy for cyber claims?
Yeah, oftentimes we recommend standalone cyber policies and not bolting it on to an existing policy product, primarily because it's typically less expensive and more robust coverage to do it that way. You can absolutely purchase a cyber policy midstream of your annual renewal program, and your broker can sync up that policy with your renewal next year, or write a small or a long-term policy to sync it up down the road. So at least you have one common renewal date. But
and are those typically going to be a separate carrier? Obviously, if you do it out of cycle, then you're kind of free to go around. But if you're doing it in a normal renewal process, does the carrier of the CGL policy pick that up too, or are they totally different separate companies? Are you seeing whole cyber insurance companies are only doing that?
Yeah, typically it's a separate policy. There's a lot of just cyber specific carriers out there that just give more bells and whistles of coverage. If you have a management liability policy that has like directors and officers and crime, like employee theft, employment practices liability, they can usually bolt on cyber. But I would just weigh the cost benefits of what the premium is and what you're getting for that premium against a standalone policy. And oftentimes the standalone policy prevails.
Great. Awesome. Well, look at these pictures of us, Melody. We look good there. Get back to the days where I'm actually wearing a bow tie in the office, because I actually see real human beings.
Like summertime.
Yeah, exactly. Great to have you. Thank you so much for the last 2 sessions here. And to our viewers, obviously, thanks for joining us. And we look out if you have additional questions. Melody's information is here. Again, this is not, Melody's opinion on everything. She's going to want to hear more about your business before making a decision about what type of policy you would want to get. And likewise, nothing I'm saying should be construed as legal advice. Go ahead and forward this around to your friends and colleagues for their information purposes. And we look forward to seeing you in future webinars. Thanks again, Melody.
Thank you. It was my pleasure. Take care.